Okay. Good afternoon, good morning, good evening. I'm not sure what time you're going to see this, but I'm doing this for the second time because I went off on a tangent on the last time for recording this. So I'm going to do my best to stick to the material and not run off on a tangent. Okay, so you obviously got the blog page, and the most important part is, if you're not familiar with some of the concepts I'm talking about, no problem. I put links in the on the blog so that you can see, you can go to those different links, and then it will go much more in depth into the material that I'm going to go through. Okay, so let me jump right in here and show you how this works. Okay. Over here on the historical trade distribution side, you're going to see some R multiples. Those are listed on your trade setup. First of all, let me explain. There's 400. This was taken from an account that had 468 trades in it, and what you're seeing over here is the R multiples for those trades and the number of transactions that had them. And on the losing side over here, you're going to see there were 293 trades that were losers, and those were 1R multiples. Okay, so you're probably saying, well, what's the R multiple? Well, that's really that all comes down to the account size. It comes into the amount that you're going to risk. Okay, so let me jump over here and show you. Basically, okay, so once you understand what the R multiples are, okay, then you're going to come over here and click on start, and then you'll see over here where it says current equity. Okay, I'm using a small account with small numbers here so that everybody's very familiar with it and they don't have to break this down with a calculator. It's real simple. $10,000 account. You're going to be risking right here a 0.5%. I know everybody's, oh, I risk more. Okay, that's fine. Don't worry about it. We'll change. We can change that to whatever we want later. You are going to have commissions in here. Okay, so the minimum commission is going to be $10. I realize that's more than you're going to spend, but you know what? Maybe you're going to get some slippage on the trade. Okay, slippage does happen once in a while. Anybody that's real here knows that you put on a couple of transactions and you didn't get filled exactly where you wanted to. Okay, so I'm gonna build in an element of reality here. Okay, all right. So you can see over here you've got a risk reward of 2.56, 175 winning trades, and that's going to be to a risk reward 1.0, and you're going to have 293. Now that's going to be a negative 1.0. So this will be a positive 256 and a negative. It's not going to show up there on the, just think of it this way. Anything that's in this column of red is going to be a negative. There'll be a formula that goes up here, okay? There'll be a formula that goes up here. And it's all directed to this column. So if you look up here in an Excel sheet, each one of these columns has a mathematical formula behind it, okay? So I'm not going to get into the mechanics of how this thing works. This isn't a programming video, it's a trading video. So I'm going to show you exactly what this risk reward, what it does. I'll come over here and briefly, if you look at the $10,000 account, your position size is a 0.5%. It's not even 1%, it's a 0.5% plus a 10% or a $10 commission. So if we lose our first transaction, it's going to be 60 bucks. All right, so let me show you how this thing works. You're going to come over here, you're going to click on stop. All right, then you're going to click on start. When you click on start, you're going to see down here, it populates these boxes. All right, there's two ways you could run this. Let me show you. You click on run next trial, and then it puts in the first trade. You see it? See how you lost? It says 9,940. That's because you lost 50 bucks on the trade, $10 on the commission, and it's showing you there's a 1-hour multiple there. All right. So then I'm gonna click on this real quick 9 more times so that we have 10 trades. Okay. Now just watch what happens. Second one's a loser. Third one's a loser. Fourth one's a loser. Fifth one's a winner. Notice that over here, something I didn't show you, over here on the left-hand side, this is an equity. This shows you the current equity on the portfolio. This is the number of transactions down here. And then over here, this is your R multiple distribution. So when you see these R multiples come off on the trades, it'll take it and highlight it. The length of the bar will show you whether it was a 1R, a 2R, all the way up to a 10R. Okay. Down here, you've got some more results summary. Your equity down here. There's several things in here. I'll show you. We'll get to, but I'll show you some other cool things that you can do with this to run some portfolio simulations. And basically what this tool is for, you're probably saying, well, this is great, but what is this, a toy? No, what this thing is it'll help clients if you're using it for somebody that you're trading or you're training, or if you're an individual using it. This will help you deprogram your brain from thinking that you need a high percentage of winning trades. Okay, because most people, when they come into this business, they want to be 80% right, 70% right, and they think that that's normal. Okay, it's actually abnormal, but you're going to have to stay in this business a long time to figure that out. And once you do, then you'll find an acceptance to it. All right. So this is going to teach you several different things. What I'm trying to show you right now is that this is a system that had 468 trades in it. These are the positive R multiple distributions, and then obviously the negative was 293 losers. Okay, the winning probability over here is 37.3. Okay, this is a system that doesn't even win 50% of the time. It doesn't win 45% of the time. It doesn't even win 40% of the time. Okay, it wins 37% of the time, and it makes good money. Okay, you're probably saying, how in the hell is that possible? I will show you that. Once you start using this tool, you'll start to see how that works. Okay, you start to see how that works. All right, so let me just keep going. I'm going to press this until we get to 10 trades. You're probably saying, well, how do you know when you have 10 trades? Right down here, see the number of trial runs? I can see 10. All right, now let's take a look at what we got here. We got 10 total trades. I got 7 losers, 3 winners. Let's check out our equity. Where's our equity at? $9,920. Okay. But let's take a look at something. Something unique happened. You had a 1R multiple winner. Okay. And then you had 2 trades. The last 2 trades that we took here, one of them was a 4R multiple. I'm sorry, a 3.5R multiple. And then the other one was a 3R. So here's something cool. Just put your cursor over the top of the bar that you see right there on the green bar, and it'll tell you what the R multiple is. You see that? It'll help you see that. Now, if you come down to the losing trades, they're all going to be 1Rs. Why is that? Well, once we lose 50 bucks, we don't want to take the trade. That's it. We're done. Go to the next one. It's real simple. It's real simple. That's why you hear people talk about, well, I know where I'm getting out before I get in. That's what anybody that's a good trader, that's a very easy answer for them. They don't need to sit there and hem and haw. Well, I think I'm gonna give it a little bit more room. No, that's how you dig yourself a real ditch. All right, so let me. Okay, so you see how this works. You can run an individual trial right here, right? Okay, and now I want to see something cool. Watch this. I'm going to run all trials. Okay, so what this is going to do is this thing's going to fill this in. It's going to take all these trades automatically. So watch. Boom. What did it do? It just did it took all the trades. So when you get down to that last trade, what it's going to do is it's going to give you a report. It's going to show you, what happened. It's going to tell you how much you won. It's going to tell you, what your initial equity was, and then where it's at, what your gain was, the number of profits, okay, and it just gives you a little bit of information so that you can see over here you were 42% right, you had 58% uh, losing trades, and after commissions you made $264. Okay. Now again, you're probably saying, that's nothing, man. I got a $100,000 account. Oh, okay. Hang on. Well, we got to deal with the little guy. All right. We're gonna make this simple. I'll show you how we can, pump up the volume here in a minute. But give me a second. All right. So now let me show you something that is even better. Let's say you just made 264, right? You see the equity down here, shows you what you made. Now, see this button up here? It says reset with current equity. My current equity is down here. So instead of starting all over with 10, we're going to take what we made and we're going to add it to the portfolio. All right, so click on the reset with current equity. All right, hit the start button. And let's come down and hit all trials again. Okay. Let's say this is the second series of 100 transactions. Now notice, was this one a little bit better? Yeah, just a little bit. Okay. So now you did 10,264 turns into 12,773 for about 24%. Now, you're probably saying, what information can I gather out of this? Okay, let's take a look at it. See the arm multiples down at the bottom? Those are all one-arm multiples. Take a look at what you got over here. Here's a one-arm multiple. Put your cursor on there and just slide it over. What was that? That's a 4.5-arm multiple. Okay, then this one over here is a 1. What about this one over here? That one? I think I'm on top of the equity curve on that one. There we go. It's a 775. What's this one? 775. Take a look at this big one over here. That's a 10-arm multiple. Notice how the higher you go in your arm multiples, the less of them you get. It's, think about it. How many times do you get a 10-arm multiple trade? Do you put, $100 transaction on there? You're going to risk $100 to make 1,000. How many times does that happen? Okay, you follow what's going on here for our okay. So we come down here. What's our equity? 2509. All right, so I'm going to reset this. Now notice what happens with my current equity, watch this. See, now we're at 12,773. So let's run this again. Whoops. I gotta learn how to run the own program. Hit the start button. Now hit all trials. Okay. Now here's another run with 100 transactions, and look what we did. We made $614. So you turn 12,773 into 13,387. Okay. Not bad. Look at your equity curve. You noticing something? Here's a new high equity curve. Now look at your peak to trough. See this? See you come down? This is how real trading is, you know? That's how real trading is. That's you get these runs, you know, you run up, then it runs back down, and it runs up, runs down. And with a smaller account, you know, this is, you know, these may look like wild gyrations, but you know, you're going from like 13.6 down to 12.8. It's not so wild. You know, you can run, this is running 0.5%, which is really nothing. Percentage, you know, risk-wise. You start running 2%, 3%, 4%, you know, this equity curve is going to look like a roller coaster from hell. You know, you're going to get a couple of sessions with transactions in here, and you know, you're just going to be like, wow, you know, it's great on the upside, but when it's coming down, oh man. And this is what you have to deal with in real trading, you know, but very few people show you this. No, because nobody wants to look at this stuff. You know, they're like, give me all the good stuff, you know. All right. I know myself. I'm going to go off on a tangent. That's why I got to stop. So I got to stop from trying to going off on a tangent. Okay, so let me show you some things in here. Let's reset with current equity. So what do we make? We're at 13,387. Let's put that over here. Let's hit the start button. Okay, you just did another 100 trades. Are you keeping track of this? So you got about 400 transactions in here now. And take a look at your equity. Where are we at, by the way? Is anybody keeping track? You know where you're at? You're at 39%. You started with 10 grand, you're at 13,929. So you made 39% on your money on about 400 transactions. With commissions, you know, you're taking commissions out of this too, so you have to think about that too. Okay. What else can I show you? Well, there's a bunch of things. First off, let's take the slide bar over here. Okay. Now come down here. I want to show you something. Over here, what you're going to see is the number of the transaction number that you just did. Okay, your equity is always going to be over here. Your profit and loss is going to be over here. It's going to tell you exactly what you've made or lost. Excuse me. And you know what kind of R multiple you had. Your R multiple will be displayed over here, so you can see this is broken down into columns to give you information, and it's showing you what your position size is on every transaction as your equity changes. Okay, so it also shows you your drawdown over here, and you can go through, like if you want to, you know, take a look at peak to trough issues. You know, maybe you want to go over here and look at, say, transaction 25, and then look at what happened going down. So you say, okay, let's go to transaction 25. All right, that's about where our equity peaked out, right? What was it at, actually 24. So 14,258. That was our equity high. You had a 4R multiple. Then it was pretty much all downhill from there until you had a good run to the upside. But you can see what's taking place inside these swings. You know, and one of the interesting things is, take a look at this. You know, transaction 25 all the way down to 33. Every single one of those trades is a losing trade. You know how many people? I mean, I got a lot of history to tell you guys, but early on in my career, I worked for it was a famous trading software company that was sold. Um, and you know, if somebody were to buy our product and come in here and the first 8 trades were losing trades, you know, our phone line would be lit up. People be on the phone, hey man, you know, this thing ain't working. Well, and you just hear every fucking thing in the book. You know, and you know, this is the kind of tool that you've got to show somebody. In fact, I sent this to Van Tharp's office years ago. And Kathy had given it to Van, and he said, you know, hey, I like this. This is really this is good. Um, and you know, just things like that. You know, and one of the other things was, I remember Tom Basso, a famous trader, who wrote a book that he would give to his customers to show them, you know, what they could expect. I think it was called The Frustrated Investor. I don't think it's published anymore. But this was years ago. And if you look it up on Amazon, you might be able to find a used copy of it. But I think I read in there, he would give this book, have these people read this book, and what it would do is it would go through and it would show people like what to expect in terms of performance. And if their thinking wasn't in line with what, you know, what the results would be, then it wasn't a good match. It wasn't a good fit. And, you know, that's one of the things that you have to do is you have to go through exercises like this to say, hey, you know, this is your system, man. This is what you're going to be trading. This is what you're faced with. Okay? And I remember Tom Dante did he had a spreadsheet or something, and it showed like, you know, if you got a system that wins X percentage, how many times uh, it would be you know, you would have a string of losses in a row, you know, what you could expect. Oh yeah, this is the kind of stuff that, you know, this is reality. It's just, you know, and I get these people, you know, calling me up early on. I mean, I had 5 losses in a row. You know, you would have thought somebody just went in their house and, you know, stole all the, you know, everything out of their house. You got a guy on line 5. He's got an insurance claim. He wants a refund on everything he lost, and it's like, what? You know. I mean, it's just it's nuts. But it's just, this is what it does. This tool helps you deprogram your brain from, you know, that thinking, and you know, that's what it's for. I'm going off on a tangent. I need to shut up. Otherwise, it's just going to turn into a comedy hour. All right, so let's, what else can we do here? Um, oh, I know what I wanted to show you. Okay, so defaults. Down here, you got defaults, okay? So let's say you want to change this to, I don't know. Let's say you have a $100,000 account, okay? And you want to use 1%, okay? Or no, let's say you got let's say you're running a fund, all right? Let's say you got you're running a fund and you got $1 million account. It's just for illustration purposes. So, the little guys probably, don't, because there's going to be all different kinds of people that look at this video. So, all right, let's run this at 1%, okay? Uh, duh, 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 duh. Whoops, 1%. All right, okay. I'm gonna come down here. I'm gonna reset all this. I'm gonna hit start. Now I want you to watch something. You can take it down, to whatever you want, to whatever risk profile that you want it to be at, whatever your risk tolerance is. That's to you. You know what your risk tolerance is. You know, you got an appetite for just want to do, 5% risk. Knock yourself out. I mean, Ed Chakota would be the first to tell you. You can use one, you can use 5%, but just be aware of the fact that the more you risk, the more volatile your results are going to be. That's the rule of trading. Look at that. You still made money on this run, but look at that run up there. That's probably the best run it's had. And because you're risking so little after paying the commissions on it. But the point is, I'm just trying to show you what you can do with it. Okay? Let me show you something else. Um, let's say you're a high percentage day trader. Okay? I'm going to bring in another one that I've already got preset. And I didn't change anything around fancy. I'll explain to you exactly what I did here. Uh, you see this? There's a 1.0. There's a 1.5 to 1, and then there's a 2 to 1. Okay. And then over here, I've got 1 to 1. Those are losers. Okay. So this would be somebody that uses profit targets. They've got a particular setup that works 60% of the time. 40% of the time it doesn't work. And I know guys that trade like this too. I know guys that go for 10, 15 ticks, 20 ticks, whatever, and they're in and out all day long. You know, they'll risk 10 to make 10, 10 to make 20, 10 to make 15. You know, they'll do it all on, but if they have a higher probability, setup, they can end up with results. They can have a historical distribution that looks like this. So they got basically 60% winning probability, risk rewards 125, 1.25, and expectancy comes out to 0.35. Okay. I just don't want to take the time and delete all the other ones and then put these back in there. And you can do that. I should show you something else. There's a button over here that you can clear out all of this so you don't have to deal with that. Okay, just to let you know. All right, what are we doing here? Let's hit the start button. First thing I'm going to do, because I didn't check this down here, I'm going to come up here and take a look at what we got. All right, so we got a $10,000 account. We're going to risk 0.5%. All right, come back down here to this tab. $50. Do a one lot. And let's increase that. Let's go to 1%. Okay, remember, I just did the reset on that. Make sure you hit that until it changes. Wait till you got the change over there, okay? Then hit start. Okay, so now what do we got? We got a position size of $100. So that'd be a 5-tick loss. Or if you're going to do one lot and you're going to risk 10 ticks, that'd be $100 plus. So it really depends on what you're doing. Okay, so let's run this. All right. Okay, so what did you do? You took 100 transactions and you made basically $3,000. All right. Look at what's going on down here at the bottom. What do you got? You're going to have all one-hour multiples. You can see that down there. 40% of the time you're losing. 60% of the time you're winning something. Okay? You're either getting to, if you're risking 10, you're getting to 10 up here. You might get to 15. That'd be 1.5. Or you get to 20 ticks. I mean, I'm throwing a scenario at you that would be you're risking 10 to make 10, make 15, or make 20. That's what this would represent over here. Okay, so if you're doing a 1 to 1, that means I would be risking 10 ticks to make 10 ticks. Over here, I'm risking 15 ticks to make 10, or I'm risking 10 ticks again to make 15, and then over here I'm risking 10 to make 20. See how that works? Obviously, I'm not going to get as many 20s as I am, 10, just 10 ticks. And then you can see your winning probability down here. Okay. Now again, if we scroll down to the bottom down here, one of the things that you find when you have a higher probability system is what? You don't take very many hits in a row. Now you might be saying, hey man, I like that. That's right up my alley. That's what I want. Okay. Well, can I give you a piece of advice? That's going to require you to really, really stretch your cranium and come up with something that, is that's going to work 6 out of 10 times. Okay. You ain't going to get that flipping a coin out of your pocket. You're not going to get that by putting a stochastics at the bottom of the chart, and waiting for that thing to be overbought or oversold. you're gonna have to do some thinking, But the point is, the math that I've got around that's built around this is to show you, what type of trader are you? What do you want to do? You know, can you handle, you know, can you handle the the lower numbers, the lower probability numbers, you know? Or do you need a high percentage of winning trades? It's very difficult to build stuff that is, you know, that's 50%, okay, and then get a higher multiple. It's almost impossible. If you want a 50% system, in trading, you have to give and take. It's a constant check and balances. If you give something over here, then we're going to give you something over there. You're probably saying, what the hell does that mean? Okay, if you give me small r multiples, I can give you greater winning probability. All right. If you want large R multiple trades, okay, you're going to have a lot more of these. It's give and take. It's give and take on everything you do in trading. It's a give and take. All right. So let me give you a scenario. Let me show you something else. Okay. Everybody know who this guy is? That's Paul Tudor Jones. Okay. That's one of the the premier traders from Market Wizards, from the first Market Wizards book. Okay, but let me point out something about what Paul talks about in this article. And all of this is on the website. You can go to the website and download this. Okay, off the no BS website. He talks about a couple of different things in there. He talks about trading with the trend and stuff like that. But let me show you something that what Paul was talking about. You'll probably get a kick out of this. He was giving a lecture to a bunch of college students, and he said there's basically two rules that you need to follow. And he said, my metric for looking at everything is a 200-day moving average of closing prices. Okay. You use a 200-period moving average rule, and then get out. You play defense, and you get out. You go through this exercise I'm teaching in a class in technical analysis, and I'll draw a hypothetical chart up like the one below, and it will go all the way to the top of the sheet. Okay. He says, you are here. And then he'll ask the class, okay, all you know is that what you see right here. How many of you people want to stay long on this chart? Okay. About 60% will raise their hand, say yes. And how many of you want to get off of this and sell it? And about 40% of the hands come up. And he says, you 40% should never invest your own money in your entire life. he's trying to teach them about trend following, because you got this contrarian bug. I'd like to say, why don't you tell that to the algos? Those cockroaches that crawl in and out of the transactions all day long. Anyways, I'm going to go off on a tangent here. I know it. I don't even want to get started with that. Okay, so down here he's talking about the number two item that's extremely important to him. He says, what's the second thought for the students? And he says 5 to 1. And he talks about risk reward. 5 to 1 means I'm risking $1 to make 5. What 5 to 1 does is allow you to have a hit rate of 20%. I can actually be a complete imbecile and I can be wrong 80% of the time and I'm still not going to lose money. Now, how many people are watching this? This guy is probably one of the best traders in the world, okay? How many people are in here watching this are going 80% losing trades, 20% winners, and the guy still makes money? You gotta be full of shit, man. Really? Nah, come on, that ain't true. Well, I'll tell you what. You know what this tool is good for? Watch this. See this tool? You want to build that system? Let's build it. Give me a second here. I'm going to have to screw around with this thing, but it shouldn't take me that long. Okay, so I'm going to come over here. Now, his winners were 5 to 1, right? That's 20%. Over here. Okay, so we got 100 transactions, right? I got a winning probability of 20%. I got a risk reward of 5 to 1. And I got an expectancy of 20. So right there, see that expectancy? I'm not going to go into detail, but you're going to have plenty of time to read about that when you go on the Vanguard's website, okay? But here's the point. Let's run this. Let's see if what Paul Tudor Jones was talking about actually holds water. Okay? Let's hit the start button. Hit the run all trials. And let's see what happens here. Alright. That is a $10,000 account and okay, so what do we do? 22% winners, 78% losers. All right, let's keep going with equity here, huh? Son of a bitch. $12,446. What did he do? He did 30%. 30%. You know, if you've got a system that works 20%, you're going to have a fluctuation. You're going to have periods where you're going to be 30%. You're also going to have periods where you're going to be 10%. And I can guarantee you're going to go into a drawdown mode. All right, let's keep going because let's experience one of those. All right. All right. So that's 15.99. Started out at 25, went a little bit higher, came down. Now you notice 19% winners, 81% losers, and he still eked out almost $1,600 after commissions. We're deducting commissions up here. Okay. You won $5,290. Are you seeing this? This is what this is Paul Tudor Jones trading a 5-to-1 risk reward that works 20% of the time. 80% of the time it loses money, yet he still makes money. Are you getting this? This is why this stuff is important. All right, there you lost money, $3,395. All right. Anybody keeping track of how many runs we've had? What is that? 7 runs, 700 transactions. He took a $10,000 account, ran it up to 31 with a system that only works 20% of the time. There you go. Here's another really good run, 12,103. System works 20% of the time. You know how many people would not trade this, especially like this? Take a look at this. Okay, look at point number 23. No, come down here. Let's say some chap comes in here and starts trading this. He's got 35,000 start, and he comes down here from 23 to 43, actually 44, 21 trades in a row, and brings his equity to 28 before he hits a winner. You know, then he gets a winner and he gets smacked in the face 3 more times. Look at these runs. You know, this is when you break it down, this is what you see. But look at the equity. You know, it kind of, and then, you know, after you go through this peak to trough, look at this. Okay? Look at what he did. He comes out of over here, you know, and makes a new high. Start out, make a new high. See, these are the things that people don't see. This is why it helps you. It helps you see what you have to go through in order to get the end result. Look at this. You just took a $10,000 account, ran it up. Now we probably ran what 12 runs on that. So you know that's I don't know. I don't know how many I don't know the duration of that. How long it took them to make. It would have been 1,200 trades. You know, you figure it out. Figure out how many trades you do a day, and then you know. But how does that system work? You know, you're taking 5-to-1. So basically, what Paul's talking about over here is, you see what he's talking about. See, he says 5-to-1s. I'm risking $1 to make 5. What one excuse me, what one does is follow you to a hit rate of 20%. I can actually be a complete imbecile, and I can be wrong 80% of the time, and I'm still not going to lose money. You ever had anybody tell you that? You ever had anybody show you that? You know, I would have loved to have had someone do that when I was, you know, this is why I'm sharing this with you, because no one showed me this stuff. You know, back in the 80s, here I am. You know, I don't have trading books to run through and look at position sizing, and people are talking about it. You know, you need a visual something visual to look at to understand this stuff. And that's why I'm putting this in your hands. You know, that's all I'm doing is I'm trying to pay it forward. You know, so I hope this was of help to you. Um, you know, download it, use it, let me know what you think of it, and you know, just give me some feedback. Let me know what your thoughts are. But like I say, don't download it onto your main trading computer. Put it onto something else right away because you know you want to make sure that once you feel okay with it, or you have a virus check, or you have a malware check that you can run on it, then you know you're good to go. But uh, you know, for now, just download it, utilize it. Now that you've seen how it works, you can watch this video, go back in there, and if there's anything you need to look at, or you're trying to figure out how to run it, just watch the video. So I hope that was of help to you, and you know, like I said, give me some feedback. Let me know what your thoughts are, and I appreciate you spending the time, and I look forward to hearing about your results. All right. So with that, I will say good night, good morning, good evening, and I look forward to hearing back from you. So take care.